Stocks falling on global jitters. Those optimistic green shoots are nowhere to be found at the moment, and any signs of an economic recovery have been outweighed by Standard & Poor's move to lower the United Kingdom's credit outlook to negative from stable. The S&P said it lowered the outlook because of the country's increasing debt burden. We would expect all the major G7 economies to suffer downgrades, said Stuart Thompson, a chief economist in Scotland. S&P kept the UK's credit rating at AAA for now, but if it is lowered, the United Kingdom would be the fifth Western European country to lose its rating because of the global economic meltdown. Stocks in the United States were hit by the news, dropping significantly. So what's wrong with the UK? Crude oil is also falling again. In Europe, Dow Jones stocks 600 index lost 1.9%, and London's FTSE 100 index fell 2.8%. Investors have several economic reports today. The Conference Board survey on leading economic indicators rose slightly. A report from the Philadelphia Federal Reserve has showed that manufacturing in the Philadelphia region continued to contract in May for the 8th straight month. The Philly Fed Index came in at a reading of negative 22.6 for this month. The number of people filing for initial jobless benefits fell also slightly by 12,000 last week to 631,000. That's still a lot, the Labor Department has reported. The 4-week moving average fell by 3,500 to a seasonally adjusted 628,500. Still a whole lot of people. And again, no job growth, no recovery, because continuing claims hit another new record. The number of continuing jobless claims for the week ending May the 9th came in at 6.66 million. And yes, that is a definite sign. Up 75,000 from the previous week, and the highest on record. Again, and the highest on record. In the same week last year, continuing jobless claims were 3.06 million. So it's more than doubled in a year, and still rising. How can you have an economic recovery, a real, true economic recovery, if hundreds of thousands of people are still losing their job month after month? Not really. these and all this, there are more signs. Despite some recent optimism about the financial sector, former Federal Reserve Chairman Alan Greenspan isn't convinced the worst is over. Wishful thinking. There is still a very large unfunded capital requirement in the commercial banking system in the United States, and that's got to be funded. He also said that until the price of homes flattens out, we still have a very serious potential mortgage crisis. Greenspan said he also believes banks need to raise more capital than the government stress tests required. Well, it's not as bad as it could be, or it could have been. No, I guess not. And once again, all these are more signs. Everything that's got to change must change rapidly. Foreclosures stymie efforts to revive the economy. More than 2 years after the housing market tanked and the foreclosure rate began rising, the ongoing wave of distressed home sales is weighing on house prices and crimping an economic recovery. And with the jobless rising claims, well, if people don't have money or jobs to pay their bills, it's also could be called the ripple out effect. Homeowners stuck with unaffordable payments who now owe more than their house is worth must slog through the red tape of negotiating a new loan with their lender. It's like going round and round. The backlog is growing as the pace of foreclosures rising rapidly. They're up 32% in April from a year ago, according to the real estate data firm Realty Track. Some 2.4 million new home foreclosures are expected this year, according to the Center on Responsible Lending. Nearly 1 in 5 homeowners is already underwater, owing more on their mortgage than their home is worth. And while pace of job losses has slowed a little, unemployment is still headed higher. So you mix all that together, and the foreclosure problem is getting worse, not better. Meanwhile, the rise in foreclosures is tearing a hole in the household budgets of those that lose their homes and those who live next door in the neighborhood. As homes are sold off at distressed prices, the value of neighboring homes also drops. We need the foreclosure supply to start slowing down, said one real estate professor. As we get more homes through the foreclosure process, housing prices are continuing to fall. Once again, these are more signs. So far, nearly 1 million mortgages have been reworked, but many of those workouts simply added missed payments to the outstanding principal, raised the monthly payment, and made the new loan even less affordable. So, as a result, more than half of homeowners who got help defaulted on their new loans in less than a year. That's not going to do any good. So, all these are more signs. The end times transition days transition is happening. It's happening rapidly all around the world. Because everything is connected, things do happen for a reason. And these are more signs.